to welcome our two very distinguished guest speakers, Dirk Zetzsche and Douglas Arner. And now that I've fulfilled my responsibility for today's session, I will turn it over to my colleague and friend, Yulia Guseva.
Hello, my name is Yulia Guseva, and I will be moderating this discussion. I'm a professor of law, and together with Doug Ickley, I'm running the Fintech and Blockchain program at Rutgers Law School. A few points of order before we begin. We usually follow the Chatham House rules, but we will record at least the presentation portion of this lecture. Also, a few words about our presenters today, whom Doug has already introduced. Professor Douglas Arner is in the Department of Law of the University of Hong Kong, excuse me, and he's also Associate Dean there. And Professor Dirk Zetzsche is, of course, Chair in Financial Law and Inclusive Finance at the University of Luxembourg. We are privileged and honored to welcome you both to Rutgers Law School. So, Doug, Dirk, please take it away.
Thanks very much, Doug, and thanks very much, Julia, and thanks for Rutgers for the invitation to join. I think what Dirk and I are going to speak a little bit about is our new book with Ross Buckley. And
you're muted.
Yes, thank you. Thanks, Doug, and thanks, Julia, for the invitation to be here today. Dirk and I are going to speak about some of our themes from a new book that's just been published by Cambridge University Press, co-authored by the two of us and our friend and colleague Ross Buckley at UNSW in Sydney, Australia. And I think how we'll do this is after a couple of introductory remarks from both of us, I'll do a short presentation, probably around 15 minutes, and then we'll open it up for discussion. Dirk will probably open up with some discussion of the presentation, and then we'll go from there. I think from our standpoint, one of the interesting things about this book is it's given us the opportunity to bring together about 8 years of work that we've all been doing. And I think that, over the past 8 years, we have been deeply embedded in discussions and practice of issues relating to finance, technology, and regulation all across the world. And as part of that, I think we've been heavily engaged in discussions of a range of technologies, a range of approaches. And this book gave us an opportunity really to pull all of those things together and to think a bit more broadly about some of the lessons, some of the implications from that work. Maybe over to Dirk before I pull up the slides.
Thank you very much. Also for the invitation from my side. Good afternoon, good evening, good night, depending on where you are in this very global audience today. Maybe what motivated us to go into a lengthy piece of publication was that we had the feeling that all these singular publications that you find right now on fintech lack a common theme. And basically what we figured out that when we started, fintech was something special. It was something new. It was the hottest kid in town. It was a buzzword. And over the 8 years, fintech made it basically from a buzzword to mainstream. Today, I think banking is digital. Everything is digital. It is, to a certain extent, digitize or die. And in this regard, this type of evolution also changed the regulator view on fintech. There was very much in the beginning kind of attitude to nurture these kind of blossoming flowers, the very little starting points of fintech and so on. And today, we're on the other side of the spectrum, that we are more concerned about the size that the economies of scale and scope inherent in technology may create. And so the book tries to reflect on these type of changing paradigms and also try to provide solutions. And maybe as a unique feature, at least from the three of us, we've all been working with regulators over these 8 years. We tried really not only to provide a theoretical background, but to deliver something that works in the real world and that has been tested, and where we also gave the data and evidence on the effects. And so in this regard, I hand over to Doug for the short overview of our book, and then we're very happy to engage in the discussion.
Thanks for that, Dirk. And let me just bring up a few slides, and very happy to share these after. I think what we want to highlight is really four pieces. The first is this idea of the evolution of finance technology and regulation, the origin of the title of the book, which is the suggestion that over a long period of time, finance technology and institutional frameworks, including law and regulation, have been co-developmental. And so this gives us an opportunity to place some of the more recent developments, and it also gives us a framework really to think forward about change in the future. The second piece is really a series of case studies around some of the new technologies that have emerged over the past 15 years, in particular, focusing on blockchain, decentralized finance, crypto digital assets, on AI, and on data, and drawing some of the lessons of the experiences of dealing with each of these, and trying to generalize a bit about how we might be able to look at new technologies going forward. The third is to highlight something that has been a tremendous transformation across a number of countries and globally, and that is the idea of digital financial transformation, financial inclusion, and the role of a range of forms of financial infrastructure in supporting this process. And then finally, we try to bring together what we see as some of the emerging risks that have come out of these big themes, and how, as we think forward, we might be able to take a balanced approach. And so, as I said, this idea that if we think about finance technology regulation, co-developmental, and from an evolutionary perspective, if we think about this modern period of fintech, and even though we highlight the fact that the term fintech dates back to the early 1990s, it's really only in the period after the 2008 global financial crisis that we see a significant focus on this idea. And in many ways, you can characterize particularly the decade after 2008 and arguably up to 2020 and the COVID pandemic as the sort of fintech decade. And this is a period that is very much characterized by the response to the crisis, by regulatory changes in response to that crisis, and by the idea often of people who lost their jobs as a result of the crisis or of new regulations, applying new technologies to try to do finance in a better way. And we can think about crypto, we can think about crowdfunding, we can think about a variety of mobile phone-based forms of finance, all highlight these ideas. And if we generalize, I think the important thing to realize is that if we think about technological evolution of finance, this idea of application of new technologies to finance is in fact not new at all. If we look at the past 4,000 years or so of human financial history, we see a period of co-development. And many of the changes that we're seeing today, particularly in the context of things like platforms or generative AI, take place in the environment that even the context of digitization of finance has been a process that has been going on for about 150 years. We can think about finance today as one of the world's most digitized industries, but it's important to realize that finance isn't a digitally native industry. It's an analog industry that over an extended period of time has transformed into a digital industry. At the same time, it is one of the world's most globalized industries, and finally, one of the world's most regulated industries. And this particular context, I think, means that we often see new technologies applied at an early stage. I think AI provides an excellent example, which has been in use in the financial services sector in various forms for an extended period of time. It also means that as new technologies, analytics, theories, approaches emerge, that finance is already a highly digitized industry with large amounts of structured data combined with very strong financial incentives to maximize any advantage. And this means that finance often is a very interesting place to look for issues around new technologies, their applications, as well as regulatory approaches. And we actually characterize this evolution through a series of periods marked by electrification in the late 19th century. One can think of the telegraph connecting continents, our first period of globalization. A second period in the aftermath of the Second World War, in particular marked from the late 1960s with the advent of the ATM machine, with the advent of the handheld calculator, with the advent of credit card systems, and from the early 1970s, advent of electronic stock exchanges, NASDAQ, electronic payments with SWIFT, and a range of others. All of this means that by the 2008 crisis, we're already dealing with a sector that is highly digitized. And so as new technologies, new entrants seek to come in, there's already a very fertile environment. And one of our themes throughout the book is the idea that if we think about finance, it's characterized by economies of scope and scale, which have resulted in a range of risks, often characterized in the context of the 2008 financial crisis. At the same time, if we think about tech, tech is characterized by network effects, and this has a tendency towards scale as well. And when you combine these, this is what we mark as the period of Fintech 4.0, starting from around 2020. This is really a period of transformative opportunities, but also significant risks, with COVID accelerating many of these processes. I think this is an interesting one because over the past 8 years, and even more so really from the period after 2008, when we were working individually before we started working as a team about 8 years ago, questions of how do you regulate these new technologies. And I think what we're increasingly coming to is the idea that, generally speaking, it is useful to explore cautiously new technologies, to have systems of structured experimentation, and that increasingly we are moving from this period to formal regulatory systems, payments, crowdfunding, digital financial institutions, data, and certainly over the past year in much of the developed markets around the world, digital assets. Likewise, we highlight not only this idea of regulating new technologies, but the idea of using technologies for regulatory purposes, the idea of RegTech or SoupTech. But we highlight that, in fact, once again, this is something that dates back at least to the 1980s with a range of processes that set the stage for many of the approaches and developments that we're seeing now. So that kind of is really the first part, this idea of analyzing the evolution and context of technology in finance, technology in regulation, and the ideas of some of the opportunities, challenges. We really then turn from there to a series of case studies focusing on AI, on DLT, blockchain, digital assets, DeFi, and to data. And I think when we look back on each of these areas, I think what we come up with is largely this idea of the need to take a risk-based, graduated, proportional approach. In other words, the idea that one needs to have systems of essentially testing, piloting, which may be in the form of sandboxes, innovation hubs to actually support entrepreneurs and new ideas to develop. And one needs to realize that you want to allow new entrants, you want to allow new competition, but one has to realize, and a framework that we use is the fact that things can move from what we characterize as too small to care to too large to ignore, to too big to fail, very, very rapidly. And this means that as scale changes, regulatory approaches need to change, which generally means starting with an activities-based approach, which then may evolve into, as scale increases, an institutional approach. If we think about the second kind of big idea, one of the big changes that we saw across the 2010s and moving into this decade was a very rapid digital financial transformation. And I think if we look at China, China provides a very particular example of a country which has transformed from the standpoint of digitization and digitization of finance more rapidly and more comprehensively than any other. We can also look at India, and India provides a very interesting example because they adopted a specific strategy focusing on a series of different forms of infrastructure, the idea of India Stack, that was designed to provide a sort of digital public or digital financial infrastructure to support financial inclusion, innovation, and wider development. And this is something that the three of us have spent a great deal of time working on with countries around the world. And I think the takeout out of this, in particular in the post-COVID environment, is that digital inclusion, the idea of digital access, can be transformational from the standpoint of finance. But it's not just the access. One really needs more than a mobile phone to actually get the benefits. And in many ways, the second step is the availability of some sort of account or mobile wallet. And often the enabler of that account or mobile wallet is some form of digital identification, particularly sovereign digital identification. In the US, this is definitely not been a major story, but if we look at most of the rest of the world, this has been a significant trend with some risks, but also a real set of benefits. From the standpoint of how it operates, what we're really finding is that it is the ability to make payments across any of those accounts, across any of those mobile devices. It is the interoperability and the network effects. And this has taken us into a range of different approaches to electronic payments, sometimes private, sometimes public, including discussions around things such as central bank digital currencies and fast payment systems. This then enables the digitization of a wide range of processes, many of which proved particularly important in the context of COVID, and all together with traditional financial infrastructure has the potential, and we see more and more cases of this, to transform finance. We look in detail at the Chinese experience, we look in detail at the Indian experience, but we also highlight the experience of the EU, which in the same period went through a process of quite rapid digital financial transformation, not necessarily as a result of a strategy, but as a result of a range of new laws and regulations which drove forward digitization, all coming together around 2018. And that experience has then been broadened into a broader strategy, which is an approach that we're seeing more and more countries looking at. And really, from this, we then think about some of the issues around risks. Cybersecurity risks, data protection, security privacy risks, infrastructure risks, and the risk of size and scale. And I think that this is something that we've seen emerge in the context particularly of Ant in China, but we're seeing this combination of economies of scope, economies of scale, and network effects mean that we are getting not only these issues around scale in tech, but also the combination of scale in finance and technology, including from the standpoint of a range of non-traditional financial infrastructure. And finally, trying to pull all of the pieces together, we argue that the idea is a strategy where one can think about building financial systems using technology regulation to respond better to crises, to address risks, but at the same time to actually support better allocation of financial resources, supporting wider financial inclusion and development. And we take the idea from just financial inclusion and look at this more broadly from the standpoint of benefits across the Sustainable Development Goals. And I think the final point is a framing of regulatory objectives. And I think how we frame this is largely in the context of 5. Monetary stability, which is something that the crypto evolution has very much brought into context. Financial stability, which we've looked at from a range of different directions. Market efficiency, this idea that law and regulation play very important roles in disclosure standardization and supporting the functioning of markets. Consumer investor depositor protection, particularly around fraud and enforcement, issues around market integrity. This is the idea of money laundering. And finally, the idea that one can bring together a range of growth, innovation, inclusion, competition, and development objectives in our framing into a broader way of thinking about the benefits of finance from the standpoint of sustainable development. And I guess I'll pass over to Dirk for the next bit.
Thank you very much, Douglas. Naturally, on a book of a bit more than 200 pages, we developed different ideas. But what we find is really interesting that the perception of fintech changes over time. It was seen as extremely innovative and also discussed as that, also in US scholarship, as something unique. what we find is the very traditional regulatory objectives, client investor protection, of market integrity, market efficiency, systemic stability, and so on, the greater importance fintech gets, the more the traditional regulatory paradigms start to play a role. So the uniqueness of fintech has somehow vanished. And this is what I mentioned at the beginning of our presentation, that fintech has become mainstream. And so, to the same extent that we appreciate the speed and the entirely unique type of services that data-fied financial services mean, we also see tendencies that people associated with Standard Oil more than 100 years ago, that we have created new market creatures which also have a competition muting effect, where we may see barriers to entry into certain markets simply from the fact that technology can create size. And if you think about what creates barriers to entry, then this is a mix now in fintech. It's not just the technological side, if you don't have access to the interfaces, or if you don't have standardized interfaces, and if you don't have contractual relations to the prevailing platform. But it's also the size of the balance sheet that you can reach through these services, which makes it imperative that you have access to this network to provide certain services. And so basically you can say history repeats itself, but as soon as certain business models became prevalent, we also see problems of old emerging in the new technology. And so we are regulatory lawyers at our core. I have some 5 years as a fintech entrepreneur behind us. We all have worked with technology and regulatory environments. But what is quite striking is that in this regard, we now can use the efficiency enhancing features of fintech, or also the data side of fintech, to achieve the regulatory objectives of the 21st century. And that will probably be to use fintech also for a move towards sustainability, to basically data-fy financial services when it comes to covering externalities or consumption of public goods. So there is potential to use the very same technologies for a wide range of regulatory objectives. But at the core is always, we want to remain open to innovation, because open innovation is something extremely good and beneficial for mankind, but we should not forget the sentries at the gate.